Welcome to another Focus in Finance. This is Shirley Luu. I'm your host. I'm so excited, guys, because today I think we're going to have a wonderful episode that's going to talk a little bit about insurance, specifically life insurance. Now, I know a lot of us, go out throughout our life, and then some of us, we feel necessity that needs to have insurance, life insurance, to have coverage. And a lot of times folks say, well, you know what, life insurance, I don't know. Believe it or not, in the Asian community, they don't like life insurance a whole lot because they believe in this, always kind of somewhat a taboo, that means death, you talk. So the older generation doesn't like to buy life insurance and doesn't like to talk about it at all. Whereas, in the United States, the newer generation nowadays, the second generation I call it, are more attuned to having life insurance for more of a protection for family. Okay, if I die, something happens, my family would be covered. Well, guess what? And then, you got that thinking that the younger folks say, well, wait a minute, I'm 20-something years old, I don't have any family, I don't have any kids, I don't have any obligation, why do I need life insurance? And I mean, even 18-year-old kids sometime in school, high school, they're like, why do I need life insurance? I don't have any family, any of that. It's because I believe the old traditional thinking of financial planning, stuff like that, oh, you don't need that because you have no responsibility. Well, guess what? Let me tell you something. If you don't have life insurance, you better think twice, because nowadays, the new kind of life insurance is no longer that old adage where the old kind, you have to first die to even use it. Did you know I have a grandbaby, the minute that baby was born, day one, have a life insurance. Now, why would I give life insurance to a 1-day-old baby? Think about that. Why would I, right? So what I try to share and educate on television for you guys, because not just that I talk about it, but not preaching about it, but the fact that I live with it. What I believe is good for my family, that could also, as an advice, whether you could take it or not, but I think it's a good advice to have. Now, here's why I would have life insurance for a 1-day-old baby and 1 month old. Now, some of you out there, I know you're not going to agree with me on this, but life insurance nowadays has changed drastically. It is no longer a death insurance. Imagine this, a life insurance that have growth inside the life insurance. Let me repeat. A life insurance that has growth, not the 2%, not the 3%, not the 4%. The last one I did recently was we did a 9.75, and another account we did an 11.75% return. I tell you, it's one of the most exhilarating things when you properly structure it the right way. This account can be a tremendous growth. I had one client recently that I just did. I funded properly and showed him the way, within a couple of years, he has several $100,000 gains inside his account. Now, there's 4 reasons why I want to have life insurance for a baby. Okay, the first is I want to start a saving, a kind of saving, but more than just saving, more like a investment kind of things where he can have growth in it. So this account, this baby would have this money growing, and compounded interest is going to grow with whatever the market does. Why do I want that money to grow? Because you know what? That little one day may go to college. If he goes to college, he's going to need that money, won't he? Right? And unlike traditional retirement plan, where if you take money out, you can pay taxes on the gains. Inside the life insurance, if you do as a as a loan and not as a withdrawal, it is tax-free 100%. Think about when this baby, one day if they decide to go to college and I need $50,000, $60,000, or $100,000, I can take it out tax-free 100%. Whereas your old traditional retirement today, you have to pay taxes. Can you imagine taking $100,000 when you're paying 30-40% taxes? That means you only net 60. I don't know about you guys. I think $100,000 tax-free taking out is pretty good if you structure it properly. What else? What if this little baby down the road, I don't know, needed the money to buy a house? You know how you as parents or grandparents are always looking at, well, how can I help my kids? How can I help them advance and things like that? Well, certain life insurance, the one I'm talking about is the IUL, Index Universal Life, that provides for you to have cash accumulation that you can take the money out and put a down payment on the house. Now, how nice is that? When my grandbabies, one day if they needed to buy a house, that they can use part of that money for a down payment for a house, and they look back, wow, grandma did this. That is very, very cool, right? Now, remember one thing, another thing about the life insurance is that it's just not about getting the money out, but it's also getting sick. What if you have a heart attack, strokes, Alzheimer's, dementia, chronic critical illness, any of those things that could happen, right? And what if you're young enough that you go snowboarding, skiing, you're driving a car and some bad driver hit you and you hurt really bad? And can you imagine with something like that, this life insurance that you have becomes cash. You know, I have a young man, he was about 32 years old. He came to me and he said, look, I don't have a lot of money to start saving. I said, well, what can you be disciplined to save? You want to hear this? I asked him to save $5. Now, here's what happened to his story. It's really interesting after 21 years. When he came to me, he's 32. I asked him to save $5 a day, which is $150 a month, which is not a lot, but it's a starting point. He would continue to pay that every month, which is basically $1,800 a year. Now, I don't know how many of you young people out there think about saving $5, guys. You know, you can do a chore, do certain stuff. $5 is not going to kill you. It is not going to kill you. So he would pay that, and I did a hypothetical. If he continued to pay $5, $1,800, and let's say at age 65, do you know this kid would get, listen to this, when I did it, the hypothetical growth was around 6% long term. He would make about $45,000 at age 65 in tax-free retirement. Let me repeat, $5 a day gives him $45,000 a year tax-free. That's like getting a paycheck about $60,000 before tax. But he gets from 65 to over 120 years old. And the entire time he has coverage from 32 until 120 years old with long-term care, with heart attacks, strokes, Alzheimer's, and everything, and have a tax-free retirement when he turned. So what we did was, now it's been around 20-something years now, right? So I'm looking at his statement. And you know what? Guess what? I was wrong on his statement because I love to save all my illustration, all my things in the past. I didn't say what I was going to do on the statement. As a matter of fact, as of right now, I've exceeded it. His investment has gained more than $20,000 more than what I had anticipated. Now, how cool is that? Being able to teach a young person these kind of things. Then you have, you know, the older generation. Oh my goodness. I had a 62-year-old came to me and said, okay, I'm way, way behind. What do I need to do at this point in time? So they were thinking about putting in the stock option and play some other stuff, a little bit more risky. Well, here's the problem. It's okay if the market makes money, but is there a guarantee that you're going to make money, or are you taking a chance of your money? Well, this 62-year-old young lady goes, well, you know what? I'm so behind. I got to make as much money as I can, so therefore I have to invest aggressively. I said, okay, I understand, invest aggressively, but does the financial advisor have a crystal ball to tell you that you guarantee you're going to have this money? Do they? They can't. They don't have it. They can only pick certain fund that they think that's going to do well. Well, I hope they're right, but what if it doesn't? But you know what? I love this because there was a way that I was able to structure this properly for this 62-year-old to have the money 1 to 3 matching, 5 years, and they're able to accelerate it, certain condition of this unique retirement plan using life insurance to be able, you know, it's a program very uniquely that I'll talk a little bit at the next episode because it's kind of lengthy for me to explain how that program works. But back to the young man, you know, teaching them how to save that money on the life insurance. So it's giving you the living benefits. Remember I told you there were 4 components. So back to the baby, retirement account, growing tax deferred, compounded interest, and earning like stock market like return. And by the way, the stock market loses money, the floor is zero. All these funds that inside this life insurance, the floor is zero. When it doesn't make money, it does that. And it gives all that living benefit on top of it as well. And you can leave a legacy, it's for protection. And it does all these wonderful things, stream of income. Gosh, I don't know why people don't look at it. I would highly encourage you, look, term insurance is going to go away, you know that. Whole life doesn't earn a whole lot of percentage return, 4%. Whereas the UL only 6%, and IUL, you can make a lot more with the market. And some of you may have what's called variable life, VUL, and that right there with the market, when it makes money, but it could lose its money. Let me tell you, can you predict what's coming this summer of the things with the economic conditions happening right now in the U.S.? I'm just encouraging you guys to take a look at where you are. My team and I be happy to help out. There are no charge for our service, free consultation. You can reach me at 703-608-1203. And you can always Google Shirley Luu and Associates. You will see how many all-star review that we have. And we have offices throughout the country, not just in the Washington, D.C. area. I believe in today, what you do today is the light of the future of what you have. What you don't do today is what you will have in the future. They have some proverb that says, if you're near light, you're brightness, but if you're near darkness, you have a dim light. I believe in life, it's time that, springtime is here. Let's look up and let's make a change to our family future. So as always, I reaching out to you, hoping you can change your life one day at a time. First, start by your finances to help your family. So until next time, I always believe, we rise by uplifting others.